quick question before we start. Do you actually know how many taxes you paid this week? Not this year, this week. Most people give me the same answer. Income tax and when I buy something. That's it, right? Wrong. Genuinely wrong. By the end of this video, I'm going to show you 7 taxes that most Australians are paying constantly without a single notice, without a single bill, without anyone ever sitting them down and explaining it. Some of them are hiding in the price at the petrol pump. Some of them are quietly eating into your pay slip before you even notice. And one of them doesn't even show up until after you've passed away. And here's the part that made me actually sit down and film this one. One of these 7 is about to jump back up in just a couple of weeks. And it's going to hit every single person who drives a car, whether you've ever thought about tax in your life or not. So stick with me, because number 2 on this list is the one I think most people genuinely need to hear before it happens, not after. Hey guys, Daniel here. Welcome back to Daniel Reports. If you're new around here, this is where I break down money, tax and the economy in Australia in plain English. No jargon, no lecture, just what actually affects your wallet. And I'll be honest, putting this list together annoyed me a little bit, because once you start looking for these things, you realize just how many of them are built to be invisible on purpose. If that's the kind of thing that makes your blood boil a little too, in a good way. Do me a favor, hit subscribe, tap that like button. It's free, it takes 2 seconds, and it genuinely helps this channel keep going. All right, let's get into it. So before we get to the list, let's quickly get on the same page about what I actually mean by a hidden tax. A hidden tax isn't some conspiracy theory. It's simply money the government takes from you that never gets called a tax, never lands as a separate line item, and never gets its own little envelope in the mail. Some of it's baked into the price of things you buy every day. Some of it quietly reduces the value of your pay rise before you even feel it. And some of it only shows up for the people you leave behind. Let's start with number 1. And honestly, this is the one that annoys me the most, because it's completely legal, completely invisible, and it happens to almost every single working Australian. It's called bracket creep. Here's how it actually works. Every year or 2, you get a pay rise. Most of the time, that pay rise isn't really a reward. It's just keeping up with inflation, so prices don't eat you alive. But because Australia's tax brackets don't automatically move with inflation, that same pay rise can quietly push you into a higher tax bracket. So the tax office ends up taking a bigger slice of a pay rise that wasn't even a real pay rise to begin with. There was actually a tax policy report released just this year by a group of financial professionals here in Australia. And their own chairman put it pretty bluntly. He said the country has been leaning on bracket creep for years, specifically to avoid having an honest conversation about how the tax system actually works. Think about that for a second. That's not me saying it. That's people inside the tax industry admitting it out loud. So every time you hear a politician proudly announce a small tax cut, it's worth asking one question. How much of that is genuinely new relief, and how much of it is just handing back a little bit of what bracket creep quietly took in the first place? All right, number 2. And this is the one I actually built this whole video around, because the timing on this one genuinely matters right now. Every single time you fill up your car, a huge chunk of that price has nothing to do with the oil company or the servo owner. It's a federal fuel excise tax, and normally it sits at around 52.5 cents for every litre you pump. Now, because of global conflicts pushing oil prices up earlier this year, the government temporarily cut that excise down. So you've probably been paying less at the pump without even realizing exactly why. Here's the part I really want you to hear, because it's genuinely time sensitive. That relief is scheduled to end in early August. In just a couple of weeks from when I'm recording this, fuel excise goes back up to the full rate. So picture this. You fill up a 50-litre tank right now, and a decent chunk of that, we're talking well over $25, is excise tax alone, before GST even gets added on top of that. Once the relief ends, that number goes straight back up. My honest take on this one, I don't think most people even clock this as a tax at all, because it's just baked into the number on the sign at the servo. It feels like the price of fuel going up and down with the market. It's not. A good chunk of it is policy, not petrol. So if you've got a long drive coming up, or you're due for a fill anyway, that's genuinely worth knowing about before, not after. Number 3, and this one hits anyone who's ever bought a home or is trying to right now, it's called stamp duty. It's basically a fee the state government charges you just for the privilege of legally owning the property you already paid for. Depending on which state you're in, this can be 3 to 5% of the property's value. On a $900,000 home in New South Wales, for example, you're looking at somewhere around $35,000, just for the paperwork to officially become yours. Let that sink in for a second. You've already saved a deposit. You've already qualified for a loan. You've already found the place. And now there's a 5-figure bill just to make it official. There was actually research done recently that found nearly half of home buyers end up increasing their mortgage specifically to cover charges like this. So it's not just an upfront cost. For a lot of people, it becomes a debt they're paying interest on for 30 years. Number 4 is the cousin of stamp duty that almost nobody talks about because it feels so small in comparison. It's the duty you pay when you buy or register a car. Yes, even your car purchase gets hit with a state government duty calculated as a percentage of what you paid. And it doesn't matter if the car is brand new or you bought it secondhand off someone on Facebook Marketplace. Next time a mate tells you they're just buying a car, you can tell them technically they're also buying a tiny slice of property tax to go with it. It's not a huge number on its own, but stack it with everything else on this list and you start to see the pattern. Nothing on this list is enormous by itself. It's death by 1,000 small cuts. Quick pause here because I know what some of you might be thinking. All right, Daniel, this is a lot of doom and gloom. Is there anything actually positive coming up? Hang tight, because in a minute I'll show you one of these that's genuinely a smart move by the government, not just another squeeze. Number 5 is the one that gets families the hardest because it shows up at the worst possible time. Australia officially doesn't have an inheritance tax. You'll hear that a lot, and technically it's true. But if you pass away and leave your superannuation to someone who isn't classified as a dependent, an adult child, for example, that money gets taxed before it even reaches them, up to 15% on the main component, and up to 30% if there's life insurance built into that super. Here's what makes this one particularly rough. Families usually don't find out about this tax while everything's calm. They find out while they're grieving, sorting through paperwork, trying to settle an estate, and suddenly there's a tax bill nobody warned them about. If there's one thing I'd genuinely encourage anyone watching this to do, it's have that conversation with an advisor about your super nomination while things are calm, not leave it as a nasty surprise for the people you love. Number 6 is brand new, and I mean genuinely brand new, because it only started on the 1st of July this year, which is basically just weeks ago as I'm filming this. It's called Division 296, and it adds an extra tax on superannuation earnings once your total balance goes above $3 million. 15% extra up to $10 million, and 25% extra above that. Now, if you're watching this thinking, mate, my super is nowhere near $3 million, fair enough. This one probably doesn't touch you today. But here's the smart, slightly less scary way to look at this one, and honestly my own take on it. This threshold isn't set up to automatically rise with inflation the way your income tax brackets sort of do. So while it's genuinely aimed at very high balances right now, over the next 10 or 15 years, as super balances naturally grow, more and more everyday Australians could quietly find themselves catching up to a line that was originally drawn for the wealthy. It's not a 5-alarm fire today, but it's worth keeping half an eye on, especially if you're young and your super has decades left to compound. And that finally brings us to number 7. And honestly, this one isn't a tax in the technical sense. But every economist I've ever spoken to agrees it behaves exactly like one. It's inflation itself. When prices go up faster than your income does, your money quietly buys less than it used to, even though nobody sent you a bill for it. Economists actually call this a stealth tax because functionally it does the exact same thing a tax does. It just never announces itself. So if you add it all up, fuel excise at the pump, bracket creep in your payslip, stamp duty on your home and your car, a death tax nobody warns you about, a brand new super tax quietly expanding its reach, and inflation shrinking your money in the background the whole time. That's 7 different ways money leaves your pocket without a single one of them ever being labeled clearly as a tax on a bill. Here's my honest take to wrap this one up, and this is just my opinion, so take it as one guy's view, not gospel. I don't think most of these are some evil master plan. Governments genuinely need revenue to fund roads, hospitals, schools, all the things we actually want. That's a fair trade in principle. What actually bothers me is the lack of visibility. If something's going to cost you money, I think you deserve to clearly see it coming, not stumble onto it at the pump or find out about it while you're grieving a family member. You can't personally opt out of any of these 7, but you can absolutely plan around them once you actually know they exist, instead of getting blindsided one at a time throughout your life. If this video opened your eyes to even one of these, drop a comment and let me know which one genuinely surprised you the most. I read every single comment, and honestly, half my video ideas come straight from what you guys tell me down there. And if you know someone who's about to buy a car, buy a house, or is heading into retirement without knowing about any of this, do them a solid and send this video their way. It genuinely might save them a nasty surprise down the track. I'll keep tracking these ones as they change, because with fuel excise shifting again in just a couple of weeks and this new super tax still bedding in, this list honestly isn't done growing. Hit subscribe if you want to stay ahead of it instead of finding out the hard way. I'm Daniel. This has been Daniel Reports, and I'll see you in the next one.